Rashidat Adebisi, Chief Finance Officer at Mansard, joins me now to unpack the numbers. Rashidat, thank you very much for joining us. Of course, that top line is a good place to start, relatively strong. So tell us about what is driving the growth of your company right now.
If you remember from last year, we're talking about no premium, no cover, and the fact that it was a reset. So we only grew by about 9% on the gross premium written line. So we've gone by 28%. Usually our traditionally strong lines, we had strong growth in oil and energy, in motor, which is very critical within our retail space, and of course life and health. So health ran for a full year in 2014, which we started in 2013, and they grew by over 400%. So that's a really strong part of the business that we're looking to invest in.
So the point you made about this no premium, no cover policy, it seems to be really having a significant impact. But given the slowdown we're seeing this year in terms of the economy, how excited are you about that top line growth extending into this year?
Well, this year we'll still see growth in the air. First quarter will be a bit of a downer. Lots of decisions weren't taken on time. Many companies, sort of like delay taking decisions. The
impact of politics.
Challenges in getting FX for some FX-related transactions. So we saw a slowdown in the market. But we do believe with a strong close and I think the stock market going up and a lot of positive sentiment, we expect to see a much better half year.
Right. I was just thinking about that stock market move. It happened on the 1st of April, and I guess that 8% rise won't be booked into the first quarter.
Unfortunately not.
But I guess we'll get in the second quarter.
The positions are taken. I mean, I'm sure many people, and including us too, suffered challenges at the last quarter of 2014, and hopefully we should see rebounds coming in from that into our results in 2015.
Right. Tell us about your investment, this acquisition of Pensions.
Yes.
What's the story behind that? What are you hoping to achieve with this?
In the past, we've talked about the other opportunities we've looked at in ensuring that we become a full-scale non-bank financial institution. So we can offer our clients life products, health products. We can also offer them non-life, as well as asset management. And pension for us is the critical, part of that, bouquet of products that will definitely fit into the lifestyle and needs of our clients. So it's identifying their proper needs, ensuring that we can actually design products that meet that, and hopefully bringing out results both for our customers and our shareholders. Right.
Well, we look forward to that impact. Yes. Well, going back into the numbers last year, one line in terms of cost that I see up relatively higher, significantly, is management expenses. So how is that likely to evolve this year?
We won't see significant growth this year. We will still see growth. I mean, we were all impacted by some of the devaluation of the Naira. We are an import-dependent country, unfortunately. But at the same time, we also had a non-cash, expense in the year of about 160 million, which is really an IFRS adjustment. So it was a non-cash movement. It's really in equity, and it gets to move back to retained earnings over a period of time. So it wasn't really cash. So if you adjust for that, growth was there, but it wasn't as significant as it seems. Yes.
All right, let's talk about your retail strategy. You've been on that for a couple of years now. I think you're getting to the point where you should begin to harvest. What can we expect going forward?
We're seeing results. So retail contributed 32%, of the business revenues in 2014.
But at the end of the day, it's the bottom line that matters
the most.
It is,
and they still brought in about 53% of net premium earned, which is higher than what you have from institutional. So this is a strategy. This is a growth. And this is where we're going to, and it is working. It requires a lot of investments, putting the building blocks in place, and we have been doing a lot of work in that, and it reflects in our expenses, but we see a sustainable growth in the future, so we will keep outgrowing, the industry.
Right. With this whole palpable excitement about the elections outcome, what are your expectations for your business as a whole? The industry, the outgoing government has seemed to note that insurance is an interesting area that they would like to see grow. But of course, we're going to see a change of the guards now. Your take about the prospects for insurance going forward?
Prospects are still highly positive. People won't expect to see results in 1 year. It's really an industry that needs to grow over a period, but definitely has a lot more growth potential than most of the industries in the market. I am definitely very sure, and even if that doesn't happen, we will bring the attention of the new government to the fact that insurance is a very critical part, of the financial services sector. So I wouldn't be worried about that. I would be more worried about, the growing economy, support for the manufacturing sector. It's a really challenged area, providing finance can. So credit totally dried up from the last quarter of last year going into this year. We saw the impact even in some of our policies that are linked to loans. So it was really tough. So we hope that, you know, injection of cash into the system that would drive growth will positively help us, growth in power, in health, because we all need health facilities that are really not there. So these are some of the strong areas. Infrastructure will also be very critical within the Nigerian space. This is what we look forward to. This will help everyone, as well as the insurance industry.
Right. And if you can be more specific in terms of the new business areas that you are expecting this year to continue that double-digit growth on the top line, what's your key focus? We know that you've done a lot in oil. You've now acquired a pension fund manager. You've invested in the healthcare area. So what is that big thing that we should expect to really make a huge impact on the
It's a multiple of things. Well, it's really about retail ultimately. We also would expect growth from health. As I said to you, health grew by 410%. And this quarter, hopefully when I give you the result, from a very low base, I hear you, but it also shows very strong uptake from the market and the excitement, and people are enjoying the service. And this is something we look forward to providing even better services on. So we expect growth from their retail. So our agency business, we opened about 8 welcome centers last year. We will open a few more. We've gone into other parts of the country also, just to bring, you know, services closer to our customers who possibly don't have access to the online channel. Online is also going to grow. So that grew by 100%. Channels grew by 100%
I think that's an interesting point because the use of technology, you're talking about online distribution now, and of course you do have that strategic alliance with MTN. Let's focus on that a little bit. What are your expectations for that?
So expectations are, you know, bringing ease to buying of insurance product to customers, you know, within affordable ranges. This is also very important. We have over 50 million users of, you know, internet connectivity, that from smartphones, from systems. We want to be able to leverage on this. We are already doing some of that. We're putting other infrastructure in place. We'll be launching our app. It's already in play with some of our customers, and therefore customers can now buy almost all their products. So hopefully by the end of the year, as we, you know, bring on board, you know, health strongly into the mobile space, and also bring on board pensions and try and bring a bit more innovation, infuse pension, you know, with the Mansard Energy, with a lot of our systems and our platform, you know, you will definitely see something exciting.
All right, thank you, and all the best as you take this the tough challenge of this year, 2015.